Hey guys, what's up? So today has been a very fun day in the market. I mean, fun for some people, not for other people. I think some of you guys have a question as Shashank, why did IEX fall down? Why did Persistent fall down? Why did Coforge fall down? So we're going to answer some of those questions right now. So without wasting time, your time and my time, let's quickly begin. Now, first, quickly, let's look at Nifty 50. Nifty 50 has been consolidating for a very long period of time, mainly because the results that are coming out overall, large cap is not looking good, mid and small cap is looking good, right? So that is why Nifty is currently in a very confused state, and there is no reason for Nifty to start going up at this point, right? Now, the first company we will evaluate is IEX. Now, IEX has had a horrible day at the market, okay? Because IEX is basically, I think, down 29.93% or 30% today. Not good at all. But why did this happen? So let's quickly go and look at the news. This is the news, right? Now, first things first, IEX, there's a new rule that came out that affects IEX's dominance. Now, think about this. IEX is one of the monopoly domination in the player with respect to power, right? They had 85% market share in electricity trading, and with electricity trading coming out in the market, it was supposed to be a great news for IEX because the future is all going to be dependent on more consumption of electricity, right? Now, there's a new rule that has come from the Central Electricity Regulatory Commission, and this is basically a new system called market coupling, and this will start from Jan 2026. Now, what happens here? What is market coupling, right? So let me explain that. But before that, IEX basically has 85% market share. HPX and PXIL are the other two exchanges who barely have 15% market share. Now, if you look at the current buyers, whoever is buying and selling in the electricity exchange today can choose where to trade, and they usually go and take it from IEX because pura volume is on IEX. Assume everything is on NSE and you can only buy on NSE, right? So that was basically what was happening right now with IEX, right? But with market coupling, the prices and trades across all exchanges will be centralized and uniform, and the allocation will be done automatically based on bids and not on performance. So now, not on preference. That means if I bid for 100 rupees of something, right, then it will automatically match it with whoever is in the background with the exchange. Does not necessarily have to be IEX. So it has become a very neutral playing field for everyone. That means even if IEX has the best platform in the market, but if somebody has a better bid, it will go there. That means it won't get a lot of volume. And this definitely reduces IEX's edge. And that is why a lot of investors panicked. Now, first things first, is it a long-term impact? Fundamental impact? Answer is yes. It is a long-term fundamental impact that has currently been created in the market for this company. Now, this is where it gets very interesting. While IEX loses, somebody has to win, right? There's always a winner on the other side. So there's a company called PTC India, which owns 25% of HPX. Remember I told you about HPX, Hindustan Power Exchange, a much smaller player currently. Now, if HPX gains market share due to this regulation, which mostly it will, even a small gain can meaningfully move the overall market cap. And if I show you exactly what happened, look at this. Mr. Manoj Kumar of PTC India very happily came out and said that currently all volumes were concentrated in IEX. Believe market coupling announcement will be good for market, definitely good for market and him, and not for IEX, obviously. Now, we own 22% of HPX. HPX might be able to achieve 33% market share over 2 years, right? And obviously, it becomes a good neutral playing field for everyone. And that is why IEX has gone down 30%, because it is a long-term impact that has been created because of this news. And this is just the phase 1 of the market coupling. There will be phase 2, phase 3, everything will be coming, and there are more information here if you want to see it, right? So this is point number 1. Now coming to the point number 2, or stock number 2. Let's look at the stock number 2 that has done little different. Okay, let's look at PTC also. That is why PTC today went up. It's up 4.5%. In fact, it was up 8% in the morning, and now it's up 4%. Now coming to the next, Persistent and Coforge. Okay, I call them the Chungumungu twins, but these are the only two companies that were growing really well in the market with respect to mid-cap IT. Right, so the mid-cap IT companies, only these two companies were doing well. Now, if you look at this, Persistent was down 7% and Coforge was also down 8%. But now, if I look at it recently, Persistent is down 7.78 and Coforge is down approximately 9.43. This is quite unfortunate, really, mainly because the market has fallen so much. The IT companies have fallen so much that it's very unfortunate, because even though Coforge and Persistent have given great result, we have seen a fall in the market, right? Now, why did this happen? Again, if you look at Coforge, their EBIT margin was flat year on year at 13.2%, and they had some one-off that they adjusted. But again, this is not a confirmed reason why it's fallen out. I'm only looking at what the negatives might have been for such a scary fall. Now, a lot of people also said that, Shashank, this might be because of overvaluation. Technically, Coforge is not overvalued. It is sitting at 4 times price to sales, which is equal to TCS's price to sales as of today. And even the P ratio is around 58, 59, right? So it is not overvalued. Another thing is there is some negative cash flow because they're also doing some capex. They are planning to either get into something related to data centers, but there's another news on CNBC that said they're not into data centers. So there's very confusing news coming out from them. But they are doing some big capex. They might be doing some acquisition as well. Whereas if you look at Persistent, again, Persistent had multiple problems. One of the US companies had gone away. One of the big US companies had got impacted. They have deferred wage hikes by 1 quarter, which is again not a good sign for IT companies. So that has again taken a massive beating for them, right? Now, coming to news number 3, the companies, which is Reliance Infrastructure and Reliance Power, again, both are down 5%. Now, why did this happen? This is because recently, I mean, today, Enforcement Directorate or ED conducted large-scale raids over 35 locations covering 50 companies and 25 individuals in connection with a 3,000 crore loan diversion scam of Yes Bank. Yes, it was a very long Yes Bank scam, and now they're going after Anil Ambani for this and some other group entities of Anil Ambani as well. And it's not just Anil Ambani's company. They're also going and finding another company called Autumn. I don't know if you have heard of Autumn. So there's a promoter called Sanjay Dangi. Even he has been summoned over here. And if you see even their stock price, they took a small hit today. So that is why Reliance Infrastructure and Reliance Power have both gone down, because they're both Anil Ambani companies, and we don't know what will happen in this space right now. Now, finally, let's look at some good news, something that went up today. So Force Motors did a very good job today because they actually came out with a very good result. And if you see Force Motors here, one second. Yeah, if you see Force Motors, they actually went out quite well, right? So Force Motors again came out with a very good result. And if you see Force Motors, the result was good, not just now, but even last time the result was great, right? And whenever the result of this company is good, they have done really well in the past. So if I look at the last quarter, which was somewhere around April, May, you see this was the day it broke out during earnings pivot, or also called as good earnings. And after this, it has come up to here. So in the last one quarter, it has given almost 80 to 90% returns, which is great. And it has again given a good quarter here. And most of the auto ancillary companies have given a very good result. Now, again, coming back to this, I want to tell you guys that the market is become very choppy because the results are not looking great. I would like the results to be great, but mid cap and small cap results are coming out good, but large cap is not looking great. Again, even Reliance is taking a beating right now. Some bad news are coming into the market. Jane Street is back in the market. So be very careful, but I would strongly suggest, if you're in this game for the long term, do not worry at all, because companies like Persistent, Coforge, they are free cash flow companies, and they are very good for a very long period of time. If you take them for a 3 to 5 year to 7 year horizon, these are very good companies in the space, right? But IT as a whole is taking a massive beating, so you need to be very careful about that. But again, if you have any doubts, any questions about the results, please put it in the comment section below, and I will try to answer as many as I can. And if you want more updates about the market, in my YouTube community, I put something called as a daily pulse PDF report, where we talk about the entire news, different things in the market, top setups, watch list for the day. Everything is there in the YouTube community as well. So if you want to be a part of that, you can join the YouTube community as well. This is me, Shashank Udupa, signing off, guys. Take care. See you guys. Bye bye.